Welcome back to the channel, everyone. There's a lot of deception out there. Yes, that's exactly what it is. They're blatantly lying. You think not? Let me expose it. Let me show you. Let's go right to this article here. This is from Reuters. You want to look it up for yourself. Go read. Scroll down to the middle of this article. First, read it fully, but look at the middle of this article. Look at the portion where they say something akin to commercial real estate has stabilized, or they're trying to paint it as not a problem for the banks. What? Now, why is this relevant to the bank coins, XRP, etc., liquidity? Because the commercial real estate loans in industry, which has been absolutely putrid, is what could take down a lot of those banks. It's one of the major wounds in the banking system that would cause them to run towards gold. Gold would explode if those banks go down, as happened before. XRP would proliferate at lightning speed, not just XRP, but any of these bank coins would proliferate throughout the system at a lightning pace. Why? Because they need liquidity. They're going to be required. They already told us this. They're going to require advanced transparency. You get that with DLT technology. You get liquidity from DLT technology. Not only that, you get independent liquidity that the banks themselves could control. People are not making a big enough noise about that. Hence the treasuries, hence all these proxy buying of XRP, etc. Even as retail is selling, you have the large entities buying XRP. You haven't seen that correlation? There's still articles coming out the last couple of days about retail legacy holders of XRP selling. That's what the article writers claim. Okay, then who's buying? Large companies are positioning themselves to either buy or acquire large amounts of XRP for treasuries. Why? Liquidity, independent liquidity. That's another thing we're going to get to. There's two major lies that were told in the last few days, folks, that people need to know about if they want to understand why. One of the major reasons why these bank coins and as well as gold are going to explode, and if they want to protect themselves as well. Not financial advice, just my humble opinion. This is the first one, the commercial real estate thing. So they say that, oh, there's no problem with commercial real estate right now. It has stabilized. It's stabilized. Remember that. That's a direct pull from that article. It has stabilized. Really? That's coming from the Fed, right? I believe it's the New York Fed, I believe. Really? So if that's the case, another Fed wouldn't say the opposite, right? If that's the case, it has to be true because it came from some source in the Feds, right? All the other experts wouldn't disagree, correct? If you like this type of content, take those powerful hands and hit that like button now. Let's jump into it. Look at this. You know, once I read that and I know that something's false, I'm going to look into it. And I was flabbergasted. Like, why are they trying to deceive the people so badly? You tell me. Is it because they don't want the people too bullish on these cryptocurrencies, which they themselves are utilizing, collecting? They're collecting giant pools of them. They're utilizing the systems, and they're using the new financial system in every possible way. They don't want the people to know about that. Maybe that's a possibility. Here we go. I'm not going to wait any longer. Let's expose this, okay? So, if, and then I'm going to unveil the sources, if what they say is true, listen to this. Commercial real estate loan, this is from the experts, commercial real estate loan delinquency rates, especially CMBS, and loan modifications have been rising throughout 2025. Rising? An increase? Does that sound like things have stabilized? Sounds to me like they got worse. No? What do you make of that? These both can't be true. Either things have stabilized or delinquency rates, which we already know from all the reports earlier in the year, these things were going through the roof. Who's buying commercial real estate? How are they going to move that? What was the solution? Who's the buyers? We saw the articles. Anyway, so commercial real estate loan delinquency rates and loan modifications have been rising throughout 2025, signaling increased distress. So whom are you to believe? You can believe the experts, all the other experts, you can believe that Fed. Well, wait a minute. Once more, I ask you, because this came from a source in the Feds, I believe it was the New York Fed. All the Feds should agree, right? You sure about that? Someone's lying for a reason. But let's go here. So it says banks are having to deal with more non-performing or troubled loans, which is a key indicator of rising risk. Yes, because that is one of the major things, right alongside unrealized losses, alongside of uninsured deposits, massive amounts of uninsured deposits, right alongside the liquidity problems that are happening within the banking system that no one's talking about, but I've been covering, especially in that last members only video. We can go on and on about these problems. They're allowing to continue. Why are they allowing it? Do they want the system to go down? You think it's just them being, nescient? Nescience, I love that word. Nescience means ignorance. They're just being ignorant? Or maybe they rigged it. Bear with me. I felt like a spider got on me. And believe me, over here, those spiders, you get some massive spiders. So you feel something like, whoa, what's that? Trust me on this. And not those thin, big spiders. They're like this and they're thin. I'm not talking about them. No, I don't know what these spiders are that exist in this area. They're big and they have thick legs. They look like slightly downsized tarantulas, but they're not tarantulas. I don't know what they are. I just know I don't want them on. If one gets in here, because like I said, the garden is right outside that door right there. There's a massive window there. Should they get in here? I don't want them on me. Not one of them. Anyway, so that's why I was like, whoa, what was that? So now let's continue on here. Here we go, a little bit more. So then it continues. A massive amount of CRE debt, up to $957 billion, is maturing in 2025, forcing refinancing at a much higher interest rates, which is a significant challenge for property owners and banks. This puts acute pressure on banks to either extend, so they're kicking the can down the road, which is not a solution. Sooner rather than later, you're going to have to deal with this problem and the kicking must stop. But let's keep going. So either extend and pretend. Wow, that's actually eye-opening that they phrased it that way. Pretend. What do they mean by that? Extend and pretend. What do they mean by that? Perhaps they mean pretending as if there's no problem, like what we're reading from the Reuters article that they're quoting from someone in the Fed. They're pretending as if there's no problem, but there is a problem, and people that trust the bank should know that. People that are going to profit from the downfall of the banks, like bank coin holders and gold holders, should also know about that. People that may want to protect themselves from possible contagion if these banks go down. It looks like that definitely in the next few years, there is a high risk of that. They may want to know about that. The truth, not a lie, not a pretend, not some illusion painted. Let's keep going. So it says either extend and pretend, restructure, or deal with defaults. Okay, let's continue on. There's more. It says here, experts. So does it seem like they're lying, deceiving? Why? You tell me. I mean, hey, I'm just presenting. I told you what they said. You can read it for yourself on Reuters.com. And now I'm presenting the other side. Are these all non-Fed sources? Do they contradict themselves? Wait, we shall see. Let's continue. It says experts note that smaller and mid-sized regional banks have significantly higher proportional exposure to CRE loans. Yes, but we must keep everything within context. So let's say that's true, which I would say, hey, let's look at a multitude of different sources on that particular information. But once again, let me paint a little context. So let's say the mid-sized to smaller regional banks have significantly higher proportional exposure to CRE loans. But then what about the bigger banks? So the bigger banks do have this exposure, similar exposure, but they also have massive uninsured deposits. Massive uninsured deposits, massive commercial real estate problems. You don't see how that all fits together, and that's highly problematic. So while they're trying to protect the banks, the larger banks, not to someone who is perspicacious and knows a bunch of information, that doesn't work on us, because we see it like, wait a minute, that doesn't really make a difference. They still have a wild amount of commercial real estate loan problems, the larger banks. Then also, once more, massive uninsured deposits. There's another problem. I'm not going to delve into that, but let's keep going. Making them much more vulnerable to losses than large diversified banks. Yeah, like I said, they're not taking everything into account. The large banks are in major trouble, but let me move on. Okay. The systemic risk might not be, this is our opinion, might not be catastrophic. Well, they're talking about small, medium-sized banks, etc., but that's opinion. What is catastrophic? Someone having their accounts frozen, or, let's say if we're interpreting the buy-in aspect, which buy-in aspects is going to click in when you're not insured by the FDIC. They could just take your capitals uninsured deposit. So you will be treated as an investor or something of that nature. They could just take your funds. So, is that not catastrophic if something were to occur and then all of a sudden this capital is removed from your life permanently? What is catastrophic to them? We must ask these questions. So it continues on, but the risk to a substantial number of individual banks remains high. Say that one more time. The risk to a substantial number of individual banks remains high. Really? Why don't they put a number on it? They're experts. Why don't they ever put a number on it? Because maybe the number might be a little bit jarring, like what I showed you. See, we do good work here. We do good work here. The things they're not going to tell you, I've shown you on this channel. I'm just saying, once in a while it's pretty good if you say you want to pat yourself on the back, but not literally, but you want to say, hey, I think I did a good job. You should, because the world is mostly not going to tell you did a good job. The world is not going to do it. Sometimes people close to you may not do it. You need to do it yourself just once in a while, quietly, silently in here. Yeah, I did a good job. Bring yourself that positivity. Let's keep going. So, it goes on and on and on, folks. The pace of CRE lending activity rebounded in early 2025. Holy smokes, they're continuing. The situation is highly divergent. Office, right? We know. Office remains the epicenter of risk, right? Because who are they putting in to those offices? You have a massive unemployment problem, a massive non-hiring problem too. They're even firing recruiters now en masse. 3. They're still struggling against the idea of work from home, which they have in the media tried to bury to make it seem as though this doesn't exist anymore when it does, or that it's not a problem anymore, and yet it is. Or they don't even want the idea put out there to people to have it on their mind. Get what I'm saying? Because sometimes when you're against something and you're speaking on it, you bring that idea to the forefront of new minds, and they say, well, maybe I want to work from home as well. So they don't even talk about it anymore. It doesn't negate that the problems still exist. You see? So that's something they still struggle with. Multifamily, industrial, and necessity-based retail are performing relatively well. This is what they're saying here. Risk office remains at the epicenter of risk with values down significantly. This is what they're claiming. Bank exposure to office assets is clearly worse. My word. So then what? Do you see the deceptive speak? How you just said one thing, you're saying another. I'm going to read it once more. Bank exposure to office assets is clearly worse. My word. All right, so let's go here. Bear with me one moment, please. So let's go down here to some of these sources, right? JP Morgan is one of the sources I'm pulling from here. The St. Louis Fed. You know what's interesting? We get a lot of information out of St. Louis. I wonder if they're rogue. They go against the grain a lot over the last few years. Analytics from the St. Louis Fed and industry reports note a significant surge. So yes, they did contradict themselves. As a Fed overall, one Fed is saying, hey, there's no problem. This Fed here is showing numbers, charts. An industry report notes that a significant surge as high as 66% year over year through June 2025 in the value of modified commercial real estate loans. That doesn't sound like things are getting worse. Why did they lie? Once more, this is the extend, quote unquote. This is what the Fed is saying. The St. Louis Fed. This is the, quote, extend and pretend strategy in action. So we're hearing from JP Morgan. JP Morgan cite the national office vacancy rate climbing to a new record high of around 20.4%. of banks are in trouble. Banks are in trouble. XRP is in a great position for the future, in my humble opinion. XRP, HBAR, Solana, Chainlink, XLM. These companies, if they do their job, and all the other bank coin companies, all they have to do is do their job and do it well. Speak to these banks, take meetings, close the deals. That's all they have to do. It's going to be easy. And then do the same thing with small, medium-sized businesses, etc. globally. They're going to need it. You talk that liquidity talk to them. They're going to need it. Bridge currency aspect, they're going to desire it. Real world asset tokenization, bringing in liquidity that can be used across chain, boosting those native crypto prices, of which they're going to have in closed ecosystems, in my humble opinion, then utilize that as an independent source of liquidity, because they cannot rely on central bank liquidity any longer. They can't. The central bank has been fumbling, folks. I'm not making this up. I've been showing evidence. Whether people look at it or not, I don't control that. Whether people analyze it themselves or not, I don't control that. But I present it. Whether they want to sit through a short video or a long video, and it's a longer video so they don't stick around long enough to get the information to look it up, I don't control that. But what I do control is I put the information out there. These are facts that people can look into. Once you take in those perceivings, that information, what you do with it is up to you. But these are the facts. Now, so that's one lie. Wait, I told you there was two. Did I not? Okay, hold on. Let me go here. There's something else that they mention in that very same article. And one must ask themselves, wait a minute. They're talking about commercial real estate, and then they definitely told a lie about that. But then they also bring up, once again, and I told you, we cover articles this year on the channel, where there are now major sources, major entities coming out questioning openly Fed independence. Why? The Fed, I know it sounds hard to believe, and the Fed is in trouble. It is also undergoing a change. Confidence is low. Independence is being questioned openly. There's a reason for that. Their reputation is being allowed to be sullied so that when changes are enacted, the people feel justified about it. That's the only time that occurs. So in that same article, let me put my hand up once more. This is what the article is titled, because now we're getting onto a different topic within it. It was a great article. They just were using deception in it, trying to get out ahead of this information before certain researchers come out and put out the information, like myself and others as well. Once again, this article is titled from Reuters.com, Policy Uncertainty, Geopolitical Risk Are Top Stability Issues. That's what it's titled. Now let's go here. They bring up Fed independence. But once more, they take that topic, which is potent and it is a concern, and they try to deceive. So in what they're talking about is political interference. Political interference? All of my life, these politicians have had words with the Fed leaders. All my life. That's nothing new. It's nothing new. In my humble opinion, it's nothing new. Is that really what people are concerned about when they're talking about Fed independence? You sure? No, because what I've heard and what I've seen, and even I've questioned it my entire life, is the Fed's connections to certain banks, favoritism to certain banks and certain businesses because of their connections. They're playing a very, in my humble opinion, I mean, no disrespect, and you don't have to agree with me. I'm not here to force anything on anyone, no ideas or anything. I merely present my thoughts and research. That's all, okay? So you can disagree. They show favoritism towards certain banks and certain companies because they're connected to them. They'll help them while they let these other ones perish. That's a concern. That's not independence. That's what they don't want spoken about. You think not? Look at what's happening right now. So you have some banks that are like, oh, slow the DLT companies down. They're not saying don't work with them or anything. Now they're just saying slow it down. Take a look at this with the whole banking license, etc. Because they know the new financial system is about to take over. And a small grouping of those banks is still working with an anachronistic mind state, old antiquated mind state. You can say anachronistic. It's better. Sounds better. Flows smoother. And the Fed is like, right, whatever. What's up, Ripple and Coinbase? Let me hear you out. You're about to see the most favoritism of all time. Why? Because they need them. They need to connect to those XRPL, Hedera, Cardano chains so they can have global reach. Before any of these individuals' jobs, they want to be wealthy and powerful beyond measure. For some of humanity, that is their goal. This is the way to that. They cannot grow right now. They're a plant. They're a plant that's in a plant pot with lifeless soil. And so they cannot grow. The Fed and the other large banks. They're siloed, stuck in this Western system. They don't want to be they're like Agent Smith in the Matrix. Remember he had that conversation with Morpheus when he was in the chair? And Agent Smith said what? He said, I'm trapped in here with these people. He's thinking, I must get out. And then he grabs Morpheus' head, which was real weird. And he gets close. He's like, I must get out. You must give me the code. They want out of the system. That's a good movie, by the way. I may need to go watch The Matrix. It's been a long time. That's a good movie. That's what they want out. Okay, well, a plant with dead soil that cannot grow needs new soil. That's what the new financial system is. It is the key to them getting out of this small box that they've been put in so they can run wild. Oh, you're about to see the favoritism. If you didn't see it before, if you ignored it before, you're about to see it. That's what they're talking about when behind the scenes people are speaking about Fed independence and questioning it. I told you. And I do feel that it's not in the way that they're putting here with the whole political connection. They're connected because the banks and the large asset manager literally control it. You think they control the governments. They're in those positions and have those connections and willpower much further than a politician's career goes, typically. All right, I'm not even going to go that deep, but I could. But look at this here, okay? Look at this. So that's what they speak about. But here's the problem. So it says here, there are concerns that the Federal Reserve, I'm going to show you some proof. There are concerns that the Federal Reserve may show favoritism towards certain large financial institutions. Why are they not speaking about that? Potentially, which means they're setting people up. You think not? Wait, they're going to show evidence that they're setting people up. They're setting banks up. That what we uncovered 3 years ago. Remember, we read that document. It was a transcript, and the banks, the small, medium-sized banks, were complaining about the larger banks setting them up where they could fail or do very badly and then be taken over by the larger banks. Remember that? This confirms that this is happening. It's just they're using the Fed as the example. It says potentially influencing its regulatory and policy decisions in ways that benefit those entities. These concerns are rooted in both specific incidents and broader structural critiques. So they have evidence. Here's the first example. Folks, the new financial system is in great position. Great position. Traceability, they're going to have that everywhere so that what they've once done to others doesn't happen to them. See how that works? Yes, that's why it's going to be instituted. The bank coin companies, I predict, will become majorly powerful, and they know the technology, which these others are just simply using it. They don't know it. They don't control it. So the banks will institute certain things like traceability on every single level so that what happened, what they were doing to others, favoritism, etc., doesn't happen to them. They try to keep it fair across the board. Right. When it comes to you. Look at this. Custodia Bank versus BNY Mellon. This is coming from bankingdive.com. Listen to what they have to say. In 2022, Custodia Bank accused the Fed of favoritism after BNY Mellon. Does that sound familiar? BNY Mellon? Who works with BNY Mellon? Is it a little company called Ripple? Not little at all. I'm just saying that just to, I like to make it entertaining to myself. Ripple works with BNY Mellon. That's interesting. Well, let's keep going. Let's keep going. So Custodia Bank accused the Fed of favoritism after BNY Mellon was allowed to custody crypto assets while Custodia faced regulatory hurdles. This is what they mean when they're talking about Fed independence. They're connected to too many things. This is just one example, and this is a bank. Custodia argued this showed bias toward established institutions over newer entrants in the digital asset space. Here's the thing, but this doesn't just happen to newer entrants into the financial industry. It doesn't. This has been happening across the board. Not just with the Fed, with a lot of large banks, but the Fed is also involved. This is what I'm showing. Why not question that? Too big to fail dynamics. You want a little bit more? Critiques. My apologies. Critics argue that the Fed's emergency lending facilities and bailouts disproportionately benefit large banks. That's interesting. So if you're a small, medium-sized bank, anything happens, pops off, then it's a likelihood they will allow you to fail. Why? Who benefits from that? While they're saving the large banks are also required by the government. Somehow, some way, we tackled this topic before. They're required to buy the assets of some of those medium-sized, smaller banks. We witnessed it happen with the SVB, Silvergate, and other companies that went down. We saw it. Lived through it. That's interesting. But once more, critics argue that the Fed's emergency lending facilities and bailouts disproportionately benefit large banks, reinforcing their dominance and encouraging risky behavior under the assumption of government support. Right. That's two. We could keep going now, folks. So I just wanted to show that, they lied twice. They're saying that those things, Fed independence, no problem there. Commercial real estate, no problem there. Why are they attempting to deceive the people? What do they not want the people to know or become bullish on? That's interesting. I'll leave it there. I'll leave that there. New financial system looking brilliant. Golden age creaks that much. The door creaks that much wider open. So now let's go here. We'll end off with a little bit of Bitcoin news. All right. Let's go here to Yahoo Finance. Cathie Wood. She has some more words about Bitcoin here. Let's see if she's still bullish. So this article is titled Cathie Wood confirms $1 million Bitcoin price. Why are they all right now confirming oh yeah, we're still bullish on Bitcoin? Why? Cathie Wood did this. Didn't BlackRock? I have an article, I think, somewhere. Bear with me. Right. BlackRock did this as well. So BlackRock said this on November 9th. Cathie Wood, when was this article released? Hold on. Bear with me. November. So Cathie Wood says this on November the 8th. Oh, today is the 9th. My apologies. Sometimes I'm lost in time, folks. I don't worry about dates like that. I really don't. I just work. Take care of my people. Work. That's it. I'm not worried about dates. I function the same no matter what the date is. So sometimes I get lost in time. So Saturday, Cathie Wood says this. And then today, this article is dropped here. I don't think BlackRock said this today, but this article came out November 9th, 2025. And it says BlackRock reaffirms bullish Bitcoin stance amid price stagnation. They're all letting people know, although the people are not going to listen to them. That's just my experience. These big timers can come out and say everything that they want to say. I just don't see it out in the real world. I don't know about people online and what they talk about online. I don't know. I'm not a part of the online world as deep as others. I'm a little bit older. I'm in the real world. I'm out here in the real world. They don't care what these people are saying. However, I've noticed something. These big entities will come out. You don't have to agree with $1 million price prediction, but they let you know they're bullish so that later on, once everything skyrockets and they're taking profit and making all the gains, all the major gains, people can't say they weren't told. That backlash, they're negating that backlash. They can't be like, the companies wanted it all. The companies will say, they'll put out their representatives and they'll say, hey, listen, we did say it. We told you. Look at this article here from 2025, 2024, 2023. We told you we were bullish. We told the people. Right. I think this is part of what they're doing. They know that price is going to skyrocket. They don't know where. They're just the price is not important. Like $1 million is not important. It just lets one know that they believe that it has immense potentiality. Let's continue on here. So it says here, Kathy Wood, CEO of ARK Invest, remains confident in Bitcoin's future, even in the face of market volatility. During a podcast, Wood reaffirmed her $1 million price target for the cryptocurrency. She attributed this confidence to the ongoing growth of stablecoins, which recently surpassed $300 billion in total market value. This surge in stablecoins, she explained, signifies a pivotal moment for the digital asset market, despite the potential for short-term fluctuations in Bitcoin's price. All right. I mean, look, sound logic so far. I agree. Bitcoin is very bullish. Let's continue on. It says here, Wood emphasized that the increasing presence of stablecoins, though potentially dampening Bitcoin's immediate market performance, reflects the strengthening credibility. Yeah, I don't think it's going to have that as much long-term impact as they think. Stablecoins are highly siloed and limited. That value is going to move. And a lot of people prefer to move through Bitcoin for now. For now, because those bank coins are weaving their way into the system. We'll come to that in a later time, though. But Bitcoin is at the forefront. Bitcoin is there out first. Let's keep going. Though potentially dampening Bitcoin's immediate market performance, reflects the strengthening credibility and maturation of the broader cryptocurrency ecosystem. Okay, I see it from that angle as well. I can agree to that. According to the podcast, she pointed out that these developments are crucial for long-term growth and solidify Bitcoin's place as a leading asset, still solid. Her $1 million prediction for Bitcoin has remained steadfast, even as the asset's price has experienced downturns. The downturns, in my humble opinion, not financial advice, do not matter. There is no way right now to stop the explosion that is coming. Once the explosion is had or two, then start asking some questions as institutional interest wanes, state interest wanes, country interest wanes. Then you start asking questions about Bitcoin. These negative catalysts, like what I just presented, will tell you the story on the spot or ahead of time. You just have to watch. All right. So we're going to leave it there for today. Now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.